All right, welcome to Talking Investing. I'm Tom, and as always, this is not financial advice. Today, I have something a little different for you guys. I want to talk about the S&P 500. I'm going to look at the SPX, but what I really want to talk about is the Fed. There's some news that came out today, and I want to show you some data that shows that there's a growing chance that the Fed is going to absolutely tank the stock market next month at their next Fed meeting. So I want to go through those numbers because really, the next Fed meeting is going to be a big turning point in the market. Either we finally get to this pause in rates, which everybody's been anticipating for some time now, or they raise rates again. And I do believe if the Fed raises rates even just another quarter of a point, I do think that's going to be very negative for the market. I think we can expect to have a big pullback in the market if that happens. Now, it might turn out to be a buying opportunity going forward, but in the short term, the market is getting increasingly concerned that the Fed is going to raise rates. And I'm going to show you just how much the percent increase this has changed. The market was basically down to a point where they were pricing in a 0% chance of another Fed rate hike. In fact, they were pricing in Fed rate cuts by the end of the year, but I'm going to show you how those numbers have changed, and it's fairly dramatic. I want to start out with something the Dallas Federal Reserve president said yesterday. If you enjoy this content, please remember to subscribe to the channel. It really helps a lot, and it's much appreciated. So if you could hit that subscribe button if you enjoy this content, and hit the notification bell so that you get notified every time we make a video, it would be much appreciated. Also, while you're at it, if you could do us a favor and smash the like button, it helps us a lot in the algorithm. Fed's Logan says data does not yet show June pause is appropriate. That's the headline. So you can see here, Lori Logan, she's the president and CEO of the Federal Reserve Bank of Dallas. So this is one of the members of the Fed, and this is what she had to say. Dallas Federal Reserve Bank President Lori Logan on Thursday said she's concerned that, quote, much too high inflation is not cooling fast enough yet to allow the Fed to pause its interest rate hike campaign in June. So YouTube revenue is way down in the year 2023, but there is a way that you can help. For only $5 a month, you can become a member of the channel by hitting the join button on the YouTube page. So it's right next to the subscribe button. We have a members only live stream every Tuesday after the market closes. Also on that live stream, members get to pick a company for me to do a deep dive video on. That's for members only as well. We have a large library built up of content if you choose to join. And in addition to that, we have a Discord for members only that I'm active in on a regular basis. So I want to take just a moment to thank all of the members. It really makes a big difference. It does help me continue to do this every day. Also, welcome to any new members. Over the last year plus, the Fed has raised interest rates over 5%. So we're going to take a look at a chart showing that this is basically one of the most aggressive rate hikes. No, it's the most aggressive rate hike schedule for the Federal Reserve in the last 40 years. So you can see in March of 2022, they started the rate hikes with 25 basis points, and this is now 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 meetings in a row that the Fed has raised rates. 3 of those meetings in a row, they raised rates 75 basis points. So that was 3 meetings in a row. So this has been an unprecedented, extremely aggressive rate hike cycle. People basically thought with this last rate hike on May 3rd that was the end of it. But it looks like maybe now that is not the end of it. So we're already in some unprecedented territory. And if this continues, I do think, again, like I said, in the short term, if they raise rates in June, it's going to be bad for the market in general across the board, in my opinion, if this happens. It's also going to be very bad for banking, and it's going to potentially increase the risk of a recession or a severe recession if they continue along this path. So obviously, 0.25, they've already raised rates 5%, so the last 0.25 is not necessarily changing the world, but is it the straw that breaks the camel's back? Because right now, we are already at a breaking point. We've had 3 of the 4 largest bank closures in the history of the United States over the last few months. So you can see we're getting very near a tipping point. So this next meeting is going to be vital. The Fed did open the door. Jerome Powell opened the door in his discussion after the last Fed meeting that having a pause was definitely on the table. So obviously the market read into that as basically the green light that they were going to pause rates. The data in coming weeks could yet show that it is appropriate to skip a meeting. That's a quote from Logan as well. She said in remarks prepared for delivery to the Texas Bankers Association in San Antonio, referring to the Fed's twice quarterly policy setting meetings, the next of which takes place June 13th or 14th. So that's less than 1 month from now. But then she says, as of today, though, we aren't there yet. So these are some very mixed signals. She's leaving this rate hike on the table in a big way. In fact, she's saying, all things equal, if we don't see more data, we're not there yet. We're not to a pause yet. So the default in her mind would be a rate hike. Now, obviously, the Fed has to make this decision as a group, but to hear one of the presidents step up and say, she thinks we're not ready to pause, that is definitely concerning. Now I want to go to the CME futures. There is a watch that basically predicts what the Fed is going to do. And I want to show you how much this has changed over the last 3 weeks because it is dramatic. I'll read to you guys what this is in case you're not familiar. Analyze the probabilities of changes to the Fed rate and U.S. monetary policy as implied by 30-day Fed funds futures pricing data. So this is literally analyzing the futures to see what traders think the chances that the Feds are going to raise rate. Right now, 63% think the Feds will do a pause. This is down from 100%. This was at 100% just a few weeks ago. So now it's at 63%, and a 25% basis point rate hike is now up to 36.7%. So again, just over 2 weeks ago, this was at 0.0%. In fact, there began to be a percent built in that they were going to lower rates, albeit it was a very small percentage. I don't think too many people truly believed that was going to happen, but the vast majority, this was at like 98%, believed that there was going to be a pause in the next meeting. So that's now down to 63%. And this number, the number of people who think a rate hike is going to occur, went from 0% to 36.7%. So this is a big change, but you can see the market is still favoring no rate hike. So if we do get this rate hike, that means it's still almost 2/3 of the people are pricing in the Fed taking a pause. If that doesn't happen, if the Feds raise rate in the next meeting, I do think that we're going to have some short-term extreme volatility, and it's going to be to the downside in my very strong opinion. Okay, the other thing I want to look at is flash forward to the November 1st meeting. So a few weeks ago, when people believed there was basically a 0% chance that we were going to get another rate hike in June, at that same time, if you looked at the November numbers, it was pricing in 100% probability that the Fed would be lowering rates by this November 1st meeting. So that is no longer the case at all. There's now 27.4% of the people who think that rates will be the same as they are right now, and there's still 5% of the people that think even by November, rates will still be up 1/4 of a point from where they are right now. So the 27% who think we're still going to be where we are right now, which would mean no more rate hikes, but no rate reductions, that's at 27%. That chance, if you go back just 1 week ago, that was at 1.8%. So that was almost zero, which means just 1 week ago, almost 100% of the market thought that the Fed would start lowering rates even by November 1st. That would leave 2 more meetings for potentially 2 more rate decreases. And you can see the probability of that was extremely high a week ago, but we're trending away from that. Now, personally, my opinion, I think they are not going to raise rates at this next meeting. I will put one caveat in that we are going to get another CPI data point in the middle. If that number is a problem, if that number is hot, if that is too high, if we jump back over 5 in a significant way, 5.2, 5.3, 5.4, then I do think there becomes a very legitimate chance that the Fed will do this one more rate hike. If not, if the data is neutral from now until then, I do think they will have a pause. Is the thing that makes the most sense to me, in my opinion. Jerome Powell opened the door and let everybody know that that was on the table, so it will be no surprise. In fact, the market even now is still almost 2/3 pricing in the fact that they will do a pause in the June 14th meeting. Just a couple of weeks ago, the futures were betting basically 100% chance that there was going to be a pause in June, and basically 100% chance that the Fed would be lowering rates by November. So that has changed drastically, and we're going to see where this goes from here. Again, we got to watch the data points that come in, particularly around inflation between now and the next meeting. So we will get a bunch of those data points. Also, obviously, unemployment is a key figure they look at as well. So we're going to keep our eye on this. I just wanted to give everybody this update. I think it's important information. So thanks so much for watching. If you're new to the channel or you have not yet subscribed, please remember to subscribe to the channel, smash the like button, and hit the notification bell so you never miss a video. Thanks again, and we'll see you in the next video.